I've always wondered something. Banks have big buildings, they pay employees, they give me interest. Sometimes they even offer free accounts. So, how do they actually make money?
In simple terms, they make money by moving your money.
What do you mean moving? Isn't my money just sitting safely in my account?
Not exactly. When you deposit money into a bank, you're technically lending it to the bank. They don't lock it in a vault. They use most of it to issue loans.
Loans like mortgages and car loans?
Exactly. Mortgages, business loans, personal loans, credit cards. Banks take deposits and transform them into loans.
Okay, but where's the profit?
The profit comes from the interest spread. Let's say the bank pays you 2% interest on your savings, but they lend that same money at 6%. That 4% difference, that's their margin.
So they earn the gap between borrowing and lending rates?
Exactly. Banks borrow cheaply from depositors. They lend at higher rates to borrowers. That difference is their primary income source.
But if they lend out my money, what happens if I want to withdraw it?
Good question. Banks operate under something called a fractional reserve system. They're required to keep only a fraction of deposits in reserve. The rest can be lent out.
So not everyone's money is physically there?
Not all at once. The system works because not everyone withdraws everything at the same time. It's built on trust and liquidity management.
Is interest the only way they earn money?
No, that's just the core. Banks also make money from credit card interest, often 15 to 25%, late payment fees, overdraft fees, account fees, transaction fees paid by merchants. Every time you swipe your card, a small percentage goes to the bank.
So even small transactions add up?
Massively. Banks operate at scale, millions of transactions daily. Small percentages times huge volume equals significant profit.
Do banks only make money from regular customers?
Not at all. Many banks also manage investments, underwrite IPOs, advise companies on mergers, trade financial instruments. Large banks have entire divisions focused on corporate finance and investment banking. Retail banking is just one layer.
So banks aren't just money storage companies. They're more like financial intermediaries.
Exactly. They connect savers, borrowers, businesses, governments. Banks profit from facilitating that flow. They don't just hold money, they circulate it.
So my money isn't sitting still. It's part of a much bigger system.
Yes, banks make money by managing risk, pricing interest, and moving capital efficiently. Understanding that makes the financial system feel less mysterious.
That's your aha.